This is Chris Camillo. He is one of the most famous stock investors who made millions of dollars in the 2000s. To be specific, at the age of 30, he invested $20,000 that he would turn into $2 million. That's 10,000% profit. And what's even crazier, he did all of this in the span of 3 years. That's insane. He applied a simple and unorthodox strategy that so many other investors criticized Camillo for. Moreover, William Eckhart, another great successful investor, claimed that investing cannot be taught. It's only an innate talent. Camillo believed that anyone could learn to investing if adequately trained. Now, if you're like me, you're thinking, how did he do it? Well, I decided to look for the answer to that specific question, scavenging the internet and books for the strategy he used to get those massive gains. And oh, did I find something really interesting. I gotta say, Camillo is an absolute genius. I'm gonna share it with you guys, so leave me a thank you in the comments. Let's get straight to it.
Part 1. The core philosophy. Before we talk about Chris Camillo's investing strategy, you first need to understand the philosophy behind it. Every investment decision he made was built on 5 simple ideas. Number 1. People change before financial statements do. This was the foundation of everything. Camillo believed that when millions of people begin changing their buying habits, companies don't immediately report those changes. Financial statements are released every quarter. By the time Wall Street sees the numbers, ordinary people have often been living the trend for months. His second principle was, culture moves faster than Wall Street. Analysts spend their days studying balance sheets and earnings reports. Camillo spent his time studying people. He believed culture often reveals tomorrow's winning companies long before analysts notice them. His third principle, look where analysts aren't looking. Instead of reading the same reports everyone else was reading, he searched for information hiding in plain sight. His fourth principle, one outstanding investment idea is worth more than dozens of average ones. Camillo wasn't interested in making hundreds of trades. He preferred waiting patiently until he found an opportunity that looked obvious.
And finally, be willing to wait instead of forcing investments. He understood that patience is also an investing strategy. These 5 principles formed the foundation of everything he did. Keep them in mind, because you'll see them repeatedly throughout this video.
Part 2. Background to the strategy. Before I reveal Camillo's strategy that turned his investment into 10,000% profit, you need to know how he came up with this strategy. He asked himself a simple question. Where does Wall Street get its information? The answer was obvious. Quarterly earnings reports, analyst research, SEC filings, and company conference calls. Then he asked another question. Where do consumers reveal what they're buying months before those reports come out? His answer? Shopping malls, social media, YouTube, blogs, online forums, everyday conversations. That became the foundation of his investing career. Part 3. What is the strategy? Camillo called his strategy social arbitrage. When I first heard that phrase, I assumed it was some complicated Wall Street technique. It isn't. The entire strategy can be summarized in one sentence. Wall Street studies numbers. Chris Camillo studied people. Here's how it works. Suppose millions of consumers suddenly begin buying the same product. The company's next earnings report won't be released for another 3 months. Wall Street hasn't seen the numbers yet, but consumer behavior has already changed. That gap between changing consumer behavior and future financial results is what Camillo called social arbitrage. Instead of asking, what does Wall Street think? He asked, what are millions of ordinary people doing? If enough independent observations pointed in the same direction, he researched the company behind the trend and invested before Wall Street fully appreciated what was happening. Part 4. How does he find those winning stocks? Camillo constantly looked for signs such as, imagine walking through a shopping mall.
One store is empty. Another has people lining up outside. You go home and open YouTube. Creators are talking about the same product. Then you check social media. Everyone seems to own it. A week later, your friends are discussing it too. Meanwhile, Wall Street analysts haven't mentioned the company. The latest earnings report still reflects what happened 3 months ago. Camillo believed this is where opportunities begin. He constantly searched for clues like stores packed with customers, products repeatedly selling out, new brands becoming cultural phenomena, viral internet trends, products everyone suddenly seemed to own, movies, toys, fashion, and technology gaining momentum before analysts noticed. When several independent signals pointed to the same conclusion, he investigated the company behind the trend. Notice what he wasn't doing. He wasn't following stock prices. He was following people.
Part 5. Let's see some of the stocks he bought. Camillo has never publicly revealed the exact portfolio that turned his $20,000 into more than $2 million. However, these are 4 investments he has publicly discussed that illustrate how his social arbitrage strategy worked and might have turned his $20,000 into $2 million.
Coach. One day, Camillo noticed something unusual. Wherever he went, women seemed to be carrying Coach handbags. At shopping malls, at airports, at restaurants, the brand was becoming incredibly popular. Remember his first principle: people change before financial statements do. Instead of dismissing what he was seeing, Camillo researched the company behind the handbags and invested. He believed consumer demand would eventually show up in the company's earnings, and the investment proved highly profitable. Netflix. Long before streaming became the norm, Camillo noticed people changing how they consumed entertainment. People wanted movies on demand instead of driving to rental stores. He realized this wasn't just a new product. It was a cultural shift. Remember his second principle? Culture moves faster than Wall Street. He invested in Netflix because he believed the way people watch television was permanently changing. History proved him right. Crocs. Most people laughed at Crocs. Camillo paid attention. He noticed the shoes appearing everywhere. People were buying them, despite critics making fun of them. He didn't care what people were saying. He cared what people were buying. That distinction is exactly what social arbitrage is all about. BlackBerry. Before smartphones became a daily necessity, Camillo noticed professionals everywhere carrying BlackBerry devices. The phones weren't just popular, they were becoming part of business culture. Again, he focused on observing real-world behavior before Wall Street fully appreciated what those behavioral changes could mean for the company. These 4 stocks are some of the stocks that Camillo used to turn $20,000 into $2 million using his social arbitrage strategy. The next great investment opportunity might not first appear on CNBC. It might first appear in everyday life. The only question is, will you notice it before everyone else does? If you learned something new from this video, let me know in the comments, and I'll see you in the next one.